So, hello everyone. This is Shivam Rathor, and today we're gonna learn about today's topic gonna be understanding consolidation dimension structure. In this consolidation dimension, I'm gonna give you the overview about the dimension structures. So let's start. Just a minute. Let me open the application first. Okay, so this is the credentials, and here I have logged into the application. Okay, so for to go to the dimension section, we have to firstly go to create and manage, and here is the dimensions. To upload the members, so the members accounts below this dimension. In this dimension we will added how we will add and we will learn how to create members. Okay, then these are the dimensions. So with the standard dimensions, we have custom dimensions also, and standard dimensions are 11s and 4 are custom dimensions as we have created in the applications. So according to that application, according to data which we have feed on, so we have got these many dimensions here. So in this the FCCS application, we have 11 standard dimensions and 4 custom dimensions. Like product is custom, that's it. Multi-gap and product are custom. So we gonna see each and every dimension one by one. First I start with the account. So alright, so if I open balance sheet, we have all the accounts over here in our traditional balance sheet. Now I'm just drilling it down. We are going into the 0 level descendant members to the base level. So this GL code represents alias name with a bank. The GL code is 1001101, and right. Okay, so to add we have to go to this pencil icon, to the edit icon. So first the name, we have to provide the name, then description is option, then alias table is there, so that we can select the alias name by currently it is to select the alias name, that's why we have taken it as a default. So an alias name is over here. Okay, then now it is account type. So this is bank, so we are under this is bank and we are under the current asset, that's why it is that's why account type is asset over here. So when we create when we gonna go to the liability side, then we gonna this liability in the account type. Then we have equity means capital, we have expenses and revenue. What is save assumption? So in save assumption, So in this here we have I have explained the expense, I have explained the asset. So we are in the balance sheet, and so that's why it is we are in the balance sheet, and we have went to the 011 descendants and under cash and cash equivalent. So that's why we have chosen asset over here. And if we gonna provide the data for the liability, then in that case we gonna use the liability as a account type. And I have now what is save assumption. So then save assumption is then we have equity as a capital, we have equity as a capital, and expenses and revenue. So now save assumption. So save assumption generally in account type save assumption is generally uh, so save assumption is non-financial item in account type. Okay, it is not one which has the data coming in the currency. So these are like statistical analytical data which is used for reporting purposes, like units sold or head counts, like this. So these are saved assumptions. So if we are creating any account here which we do not have any data in currency format, so for example head count, number of people, so then we can take saved assumption as a account type. Okay, in account type. Then let's move forward. So currently this we are taking bank account, right? So in bank account we are working on the bank account. That's the reason we have taken asset as a account type. Now we have variance reporting. So variance reporting is non-expenses. So the term variance do not present the x, y, or any alphabetical characters. And here variance reporting, this variance reporting field determines how account is behaving, like whether it is expense or non-expense. Okay, so we have two heads under here, expense or non-expense. So this variance reporting is used to set the behavior of the account during the various reporting. So this is for our all the liability and equity we take expense, and for all assets and income we revenue we will take non-expense. So now the motive is like why we take expense and non-expenses in time in this variance reporting. So the purpose is to check the behavior of the account depending on the whether it is expense or non-expense. Okay, just to check the behavior, what is the character of this uh, the asset or liability, what is the character of the asset, liability, or revenue. So just to check these, we generally take variance reporting to categorize whether it is expense or non-expense. So I will explain it with the Excel example. So in variance reporting, okay, what is it? Okay, the alphabet has got. So variance reporting, oh okay, sorry. So this sheet has been connected with the Excel, so that's the reason it come is in that format. Okay, no problem. I'm gonna okay, I'll show it here. All right. So variance reporting, uh, we have seen two features. First one was for expense, and other one is for the non-expense. So here in the expense and non-expense, so this is basically used for variance reporting purposes. So variance reporting purposes, all those accounts which has expense and their calculation is being done with with this formula, budget minus actual. So while we create the metadata, we provide this variance reporting. We make the variance reporting as a expense. So for expenses we use the formula. We in expense we use the formula for variance reporting, budget minus actual formula. And so this is the formula for the budget. So this is the formula for the this expense. Okay, and so if so this see for your expense, the ideal scenario would be any expense account I'm gonna take. Any expense accounts, let's suppose we have created budget for rupees 100 and our actual is 90. So this is one scenario. Okay, and this is the first scenario, and in the second scenario I'm gonna take budget as 100 and actual amount gonna be 150. So we have to take, like, we have to identify which is the favorable condition over here. Okay, so like if I say for favorable condition, if I choose rent as a let me merge this, rent as account. Okay, so rent is 100 and rent in that month we have paid 150. So 90 is going to be the, so see, in the budget we have a budget of 100 and in actual we have paid 150. So which is the favorable condition in both the scenario? Like if the scenario first will prevail or the second one. So of course the second one we will prevail the second one. We will choose the second scenario for as a favorable condition, because the budget is our budget is 100 and the actual amount which we are paying as a rent is 90. So we are in a profit of 10 rupees. So this is generally representing this example generally representing as a variance reporting example for expenses for the formula which we have chosen for budget minus actual. So if we minus 100, if we calculate budget and actual for budget and actual with this figure 100, and if we minus 100 minus 90, so our output will be 10, right? So this is our favorable condition. This would be the favorable condition as compared to this one, because here our budget is going to be, our actual amount is exceeding the budget limit, right? So here we are going to be in the minus of, or I can say in a loss of 50. Okay, So the nature here in variance reporting is over here has a expense. So for spending less than budget is a favorable condition. So likewise, if I choose for the non-expense, so this gonna be reciprocal of the formula. I'm gonna reciprocal this formula like actual minus budget. Okay, so here, so it depends on our here what I provide as a variance reporting. Okay, so I don't think so I have to explain this formula, because non-expense is just the reciprocation of the expense, right? Here we have input the formula for budget, for formula as a budget minus actual, and here in the non-expense we have took a formula actual minus budget, which is just a replication of this formula. Alright, so let's move to the application again, and then we have time balance. So here in time balance, under time balance we have so many things. So time balance determines how data is aggregated across the time period, such as from months to quarter or for quarters to years. So we have a data for months for Jan, Feb and March. Okay, so let's take 10, 20, 30. Okay, so how the data gonna be aggregated, this is all about time balance. Okay, so this is useful when we are dealing with the specific types of amount is required. Unique aggregation method, such as adding balance for assets or average balances for some of the metrics. If I talk about this, the first over here, the flow, this the time balance I'm talking about, this is flow. So here the value are summed across the time, that is flow. Okay, so if I have to see the quarter one means January, February, March. Alright, I'm gonna write it here, Q1 representing quarter one, where the quarter one is summing of 3 months, January, February, March, and so it will take the flow as the data will be summed across. So the data is going to be here 6 Jan 30. Okay, 10 plus 20 plus 30, so it's going to be 60. So this represent this time balance representing a flow format. Okay, flow, the time balance is representing flow means we are just aggregating the data for the quarter one, and the for quarter one means January, February, March. We are just aggregating, that means we are just summing up the data for all the 3 months. And so for revenue and expenses we take flow, time variance which we take as a flow for all revenue and expenses. Okay, now this is a demo instant, I think. So this is some demo or simple like instant is created just now. So if there is if any of this property is incorrect, so we do not have to assume this any of the property here as a by default. It is not, we have to rectify it time by time. Okay, it can be incorrect also, so we have to have a crystal clear knowledge about it. So like this is currently this is a demo instance, so we have to have a better understanding about what flow we have to take. For time balance we have to take, what variance reporting we have to take. So I think this has cleared for now. Time balance we use for in time balance if we are taking as a flow. So generally in flow we are just summing across the of quarter 1 of this month, and whatever the amount is coming up, it represent as a flow. Okay, I'll write this flow here. Okay, now next we have balance. So balance, so this is flow, right, currently. So now I'm gonna take balance. So here in the balance time period, balance, okay, in time balance I'm gonna use the short form of it. In time balance we are talking about the balance, right? So here in the balance we are going to take the balance of it, which means, so here I have taken the value for January, February, March, that is 10, 20, 30. So for the quarter 1, for the Q1, it would be the figure which we have a balance of it. So that would be 30. Okay, so balance is balance is just, we are taking the balance, or the balance is the one, it will take the value for the last period in the range which has been carried forward, or which is prevailing. Okay, the last value of this time period. So that's why I have taken 30, because with this simple example, according to this example, we have only three months in quarter 1, January, February, March. So in 30 is the last value of it. So that's the reason I have taken balance as a 30, because in balance we always take the last value of it. And then we have, so this is balance. Okay, if we take first, then in time balance first, then it would be 100, then it would be 10, sorry. Okay, so if we are taking time balance as a first, okay, sorry, FIRST first, then the balance would be, then the value would be 10. Then we have average. So average is the simple sum divided by 2. So it will be averaging out, so it will be average the value of, like, generally for average we use the formula. What is the formula for the average? So AVG, average formula would be sum of 2, that is A plus B divided by, sorry, what is divided by 2. Okay, so just simply averaging the figure. Sorry. So for flow we use revenue and expenses, and for all the balance sheet account we take balance. Okay, and first we take for opening balance, and average is for KPIs, key performance indicator, where we have to calculate average head count. So this key performance indicator we use for the head counts, KPIs. Okay, for we choose average for the KPIs for key performance indicators for head counts. Then we have, and skip is okay. Then exchange rate, we have various exchange rate. As default, as not default, like no rate is this no rate is used for exchange rate when we are doing the multi-currency, and when we provide the rate, the type of exchange rate, not the amount but the exchange rate, the type, we can provide the type here, so it will take the dead exchange rate only. So if it is no rate, then it has ending rate translation. So no rate is so so in no rate it will take ending rate translation. Okay, so whatever is the figure, it will take the dead figure only in the row rate. So in average, again, average is basically is the average rate. Like we are not gonna average anything. Like we are not going to do the a plus b upon 2. Okay, so rate would be provided, and if we have made average over the exchange rate type, so this will be applicable for uh, if I talk about the foreign subsidiary, uh, in foreign exchange subsidiary we generally have two rates. uh, like we have two rates in foreign subsidiary. There we have two rates: closing rates and average rate. uh, so this average rate is specified by the client, which rate we have to take. So if let's suppose if we do not have any idea which rate we have to take, then in that case the type this account will pick the average rate one by one, and average is basically used for income statement, that is revenue and expenses. Then we have ending rate. This is the closing exchange rate for the period. This is applied on the balance sheet. All the balance sheet account with end with the ending rate or closing exchange rate. Then we have historical. So there are certain accounts like share capital as a same rate, like untouched. So we provide one historical rate in the beginning, and that rate goes on till the books of accounts books of account is maintained till the end, and it gonna be unchanged. So for the one rate we generally provide the historical rate, which is not affected by the fluctuations in the exchange rate. Then we use historical rate. Historical amount overrides, or I can say historical amount and rate override, and both are same. So here historical amount is overridden and rate overridden. So with an example I'm gonna explain as, let's take this is USD to INR. Let's suppose one USD is almost across to 85. So this is the closing rate. Okay, so now we have amount. Okay, let's suppose this is a closing rate or exchange rate, which is provided by the client for the particular period. So let's take an cash account. Okay, any cash account. So let's say the amount, let's suppose 2000, which is in INR. Okay, and for the consolidation purpose we have to change this in USD. Okay, right, I'm gonna put the figure over here, and okay, so for the consolidation we just gonna, for the consolidation we have to provide the rate, right? So we simply gonna multiply this. Okay, the cash account I'm gonna take is bank over here, bank account, and we simply gonna multiply. Okay, so then the figure would be, or if I just keep it simple, right, let's take this as a 80 for now, and simply gonna multiply, like 80 into 2000, it would be 16, right? 16 okay. This would be in the USD, okay. So this converted amount from INR to USD, so with this conversion, the rate overridden and the amount overridden, okay, I'm talking about these two. So it depends on the client if they might give you the account already converted out and or the rate. So here in the both the cases, overwrite amount or the rate can be entered, or the account can be treated as a historical account. So otherwise we have got one historical rate, okay, and we have entered those rates in the system, and the account is converted into historical rate. And sometimes um, clients gives you another historical rate. Then in that case, if we choose this historical rate over whenever the client will provide the another historical rate, it will in the currency in the current, or if I can say the currency transaction translation has been done. So if we choose, then we will choose this. Or else if the client provides you the amount only, so that amount will would be straight away gonna be converted into the new amount provided, okay. Simply it going to be overwriting on the amount. Oh, okay. So for now we gonna keep the no rate only. Then cube, we have only one cube. In consolidation we have console only. And then we have data storage. There are 5 data storage here. So see, the data storage currently is never share here. A store, firstly I'm going to talk about the store, okay. The store is that member which is irrespective to the dimension. Here we have opened the account dimension. It doesn't mean that this only related with the account dimension. It this member property is there in the all the other dimension also. So whatever is applicable here, so it will be applicable in other dimensions too. So the store means the data is going to be stored on this member only. So how it can be stored? Only when we going to input the data manually. So all the base members, we always firstly we always input the data in the base member only, on the 0 level descendant only, and the data is going rolling up to the parent. So we have sorry we have we have what we have cash and cash equivalent, where cash bank treasury bank clearing, so many children under the cash and cash equivalent. So we cannot enter any amount or any figure in the parent, in the head. So because this is going to be add up into this, so we will always enter the data. We cannot provide the data here. Let me merge it first. So this is the parent, okay. What happened? Okay, so this is parent. Okay, so we cannot put the data over here. Parent, these are children, these are child actually, these all four, these all four I'm talking about. So cash, bank, treasury, these all child or children are child. Okay, so we do not provide the data at the parent or the figure. We gonna provide the figure only on child level. Let's suppose I'm going to put the data here 100, 10, sorry, 10, let's take 20. So these members, they have to hold the data and they should store this data. So all the base members have the store property. So these amount, this holding amount, yeah, the holded amount is going to be have a store property. Okay, and the date and the figure or the value I can say is going to be summing up at the top. Let's use the auto sum. It's not gonna work here. Okay, I'm gonna put this here. So the rolled up data, is always going to be only on the parent, and this holding data is going to have a property of store only. So the members which hold the data value, which going to be directly so if I can say the store, what is the store property? The store property means uh, so so the store property means the members holds data values, and that can be directly enter or can be loaded. This is store. Okay, I'm gonna write it over here, store. Then let's talk about the dynamic calc. So this dynamic calc, this property do not hold the property of a store. The so in simple words I can say dynamic calc cannot hold the property to store the data. Instead its value is calculated dynamically and runtime based on the formula. See, all the parent they should have the total of the children, so all the parents will be dynamic, the storage will be dynamic, so that if the parents is dynamic, then they can only calculate the figure on the fly. Like, so once we enter this and we make the cash and cash equivalent, we already made it as dynamic, because why we have already made this cash and cash equivalent dynamic, because we already have a data, okay, and underneath this account, which is cash, bank, treasury, bank clearance. So we already have a data, and this data is going to be rolling up in the parent. So this is dynamic. That's why this cash and cash equivalent parent has a feature of dynamic calc. Okay. exactly. So all the parent is dynamic, so they have to so they have to calculate the data, which the data or the amount which is coming from the descendant level. So dynamic means that which do not store the data, we cannot input the data. Instead it will be calculated dynamically, which is based on not circumstances, which is based on the value of the children or the child, whatever the children is underneath the parent, the value will be based and calculated on the children, uh, on the parent, sorry. Next we have never share. So never share is similar to the store. Okay, all so all the base level members we can either give the value or the property as a store or never share. Store or never share. Never share. So to input the data or to load the data directly into the base members, but there is a difference. um, the store over here, this the store parent members always store the data aggregation of the child members. So they store data independently, even if it is shared independently across the hierarchies. um, if we have never share, or let's suppose any other hierarchy. Let's take any other hierarchy. Let's take, there is already cash, what we have taken cash, bank, uh, let's take investment, not investment, uh, ratios or other assets. So these ratios and assets have also wanted to have treasury account. So let's suppose now we will create this as a shared member. Okay, what is share member? This I will tell you later. First, so in the other assets, it is sharing as a property of treasury, which can be keep as a shared member, which is how like I'm gonna tell you later this how to create the share member and each and everything later. So first of all, like think is taken this way, like any members which is repeated, as we have taken treasury over here and again we are taking treasury over here. So any account or any member which we have already taken once and then we are repeating it again, we are taking it again. So this in or I can say any member is repeated again in any of the hierarchy. So that members has become as a share member. Like repeated member in the same hierarchy is represented as a shared member. So what happened, never share, if I make this base members as a never share members, these base members, then if I use this in the multiple hierarchy, then this will store as a unique data as for each hierarchy. So that is a sole purpose of making them as a never share. Even if let's suppose even if I'm not sharing, for example, let's take cash is not sharing, then still I can give this member as a never share property. So if, as I have taken treasury 10 over here, and let's take treasury again 10 over here, then this is how data is entered same. So this is not, this is not going to, this data is not going to become 11, or we will not enter the data twice, because this is the same account. So this as, but like what I mean is, we have taken the same account twice, so this treasury has gonna be having a unique property, or because this data is meant for cash and cash equivalent, and this data is meant for other assets. That is the uniqueness between these two, between these similar account. So generally this is the purpose, that so what I mean is, this is the difference between store and never share. But as such, in these accounts over here, base members, we can use either of them, a store or never share. Then we have dynamic calc and store. This will add up the property of dynamic calc as well as store. Both the properties will come over here. So since it is dynamic, we cannot input the data, so definitely it's going to be is going to calculate the data from the base members firstly, and the only thing is, it will calculate that data. Once calculated, the value is stored there. So this is basically for faster retrieval, nothing else. So if we want to have there are frequently accessed calculated members, where we are performing, where it require performance optimization, like total sales on these members. If we make it as calc and store, so it will store the data only, so we can have easy retrieval only, or fast optimization purpose. So this has been created. Otherwise the purpose is the same. Again, it is going to be calculated dynamically. So last we have label only. This so this label only is used for inputting the data. So this will display the data for the first child member regardless of the aggregation. So there are in certain times, we wanted to have a data like, so this is not for the regular account. Level only is used only for the certain let's suppose I have created a variance account, so we are not going to input any data here, so we are not going to calculate the data on fly. So that's why we have to give the certain property, data storage property has to be there. So for these kind of data, we do not input any data. That's why we gonna choose the option label only. So we like if I say that we do not want any calculation, so these are the extra accounts which are created for the reporting or certain other analysis purposes. There we will give the data storage property as a label only. so where we do not have any calculation, or we are just creating the account for certain reporting purposes, certain calculation purposes, or rules or formulas, then we can use label only, and it will only display the data of the first child member, whatever, like there are 5 child members. uh, we have 5 child members, so we in the variance account, or I can say in the label only, it going to pick up only first amount only. So this is the data storage. Now what else remaining? Yeah, so these two I'm gonna tell. We have plain type, we have console only. We will enable this console, check this, and because we have one cube, these are the aggregations, how the data we have to roll into the parent. So generally addition and subtraction use, sometimes multiplication, divisions, percentage ignores, but all the time we use addition and subtraction. uh, like like let's suppose uh, this 100 here we gonna have aggregation as addition, because we wanna get 100, like we wanted to have this cash and cash account to be adding up to the cash and cash equivalent account. That's why we gonna use the addition, because whatever the account, whatever the value uh, we have taken over here, we want it to be adding up to the parent level. So that's why we have addition. And similarly, cash and cash equivalent added into the current asset. So that's why we make all these as a addition. But when we come to liabilities, here, like this is current asset, right? This is CURRENT assets, and here we have liabilities, and we have total assets. Sorry, not here. Here, total asset. So total assets, so simply sorry, current assets and liabilities, right? So total assets, current assets would be assets minus liabilities, or assets minus liability minus equity. So like wherever we wanted to have reduce, or where we wanted to reduce it from the members above it, we will make it as a subtraction. Let's say we have here in liability, let's say we have revenue, and then we have COGS, cost of goods sold. So the formula here, let's suppose this is our gross profit. So this would be addition, but this would be subtraction, as we do the calculation in the balance sheet. So this is how we change this sign over here. For gross profit is equals to revenue minus cost of goods sold. So cost of goods sold will be subtracted. So whenever we are creating the COGS, the aggregation we will keep it as negative, or the subtraction. Then data type, this currency. So when we enter our accounts will have the data into currency, then we will make it as a currency. So in case we are entering non-currency data, which won't be of course going to be a ledger account or not currency, so it would be like head count, number of people, 1 2 3 4 like this, and unspecified, keep it un like drivers like members. mm, Percentage, if let's suppose this account is gross profit account, gross profit, then gross profit we wanted to see in the percentage, then we can make it as a percentage. And date tax we do not do over here because it is not required, as smart list is the another topic. So we have to create the smart list and attach here. And if we make this data type as a smart list, so this smart list is not enabled right now. This is currency, uh, this I'm talking about. So if it is smart currency, so that's why this smart list is not enabled. And if I make this data type as a currency, then it gonna get enabled, and we have to create a smart list and then we have to attach here. Okay, so we can have 1000 dynamic children, and this is not required because this is not enabled for the dynamic children. So inherit. So these three things are generally is for ASO cube. These three is applicables in planning, not for our FCCS. These three things are not required, as because these three things are for ASO cube and for PBCS or ASPACE. So we do not have ASO cube because we only have console cube, only one cube we are working on. So that's why these three is not applicable in FCCS. And two passes list, yeah, this two pass calculation left. So this two pass calculation is a feature when members value is generally I'm talking about those members in which we are doing the input, we do certain calculation. What could be such accounts where calculation is done, two pass calculation accounts, all right, where we have to input the data. So two pass calculation account going to be gross profit, retained earnings, net profit. All these require, and all these accounts require calculation, and we will not input the data. So from the client trial balance we do not require the closing balance. So any such accounts where calculation is required, if we enable it to pass calculation, then the members value is calculated in the second pass, after all the dependent member has been calculated during the first pass. So what will happen, if I enable to pass, okay, I'm gonna explain it through the example. We are calculating gross profit, GP, gross profit. So this is revenue minus COGS. So we also want GP percentage, gross profit percentage, or I can say gross profit percentage. So how it is calculated? So GP divided by revenue, revenue multiply 100. So when we do not enable two pass calculation. So in so when there is no two passes, the first pass, there is only one pass, okay, first pass. So it will calculate it. One is gross profit account and the second one is gross profit account. So for gross profit member, if we are make it as first pass enable, so in that case we are not enabling the two passes, we only have one pass. uh, uh, then in that case we will only calculate the revenue. It will only calculate the cost of goods sold. First pass I'm talking about. Calculate in a sense, it will total it, aggregate. As such, we have already input the figures, the revenue which we have input the data manually, or whatever the figures which we have inputted the figures. So the revenue and cost of goods sold will be aggregated, sum total, and straight away with this. So this member will have the formula. Then gross profit will be calculated with the formula. So this is one pass: total the revenue, total the cost of goods sold, and create and give the result for the gross profit. So now if we enable two pass calculation, two pass, see, in the first pass we do these things, and in the second pass, the profit margin, it will recalculate it with the new accurate gross profit revenue. Okay, so there is going to be two calculation, like we have to go through the first calculation and the second calculation. So it is used for the more accuracy in the calculation, in the calculated account. So those we have we have to have a result accurate. In that purpose, in that cases, we enable two pass calculation to have the accurate calculation. So in that case we use two pass calculation, and after complete checking, there would be first pass checking and there would be second pass checking, and the result will be provided accurately. So that's why we enabled two pass calculation. Now this upper level entity input, the users can input the data directly into the parent level entity, even though those entity typically consolidated data from the child entities. So like it says allow upper level entity input. So topmost entity is our parent. So parent entity, if we do this, then we will input data directly into the parent level entity. Okay. So that's all for today, and whatever the other things which are remaining, we gonna cover it for next class. In the next class I'm gonna again describe or gonna give a detailed description about the dimension, as we have only covered the single dimension here today, which is account dimension. So tomorrow I'm going to cover other dimensions, which are multi-gap, entity, consolidation, currency, data input. So I'm gonna cover another other 10 standard dimensions apart from the account, and four custom dimensions. I'm gonna cover all these things in the next class. For if there is any doubt, or if there is any problem occur, or you're facing with the explanation or something, just write down in the comment. I hope you like today's lecture. This is Shivam Rathore signing up for today's. Thank you.